And then, all right, so we are looking here at daily chart of S&P 500 futures contract. This is ES. And, this is a chart that represents one candle represents one trading day. As you can see, we've been coming down for about 16 calendar days or 12 bars or 12 trading days from where we made, I guess this is a contract high and an all-time high in the S&P. From that high, that was on February 19th until today, and today is low. This is about 12 trading days, but what I'm looking at is how much have we moved from top to bottom. So right now we are off at today's lows. We were down about 8%. Now, is that a lot? Is it a little? Right? It's all within context, right? We can zoom out and look at, have we fallen 8% from, swing high to swing low? And when was the last time this happened? I looked around and I think all we can find here is, this was August move and August, right? This was until Friday, right? That Friday before the Monday, August 5th, but until Friday low, we were down about 6.81%, so less than what we're seeing right now. And, the sell-off was also, I guess it wasn't as aggressive, but it was a little more controlled. And then the wheels came off with some news out of Bank of Japan. We don't really care so much about why. We're just, trying to put some context around these kind of moves. So if we measure from this is July swing high to August 5th low, right? We're down about 10.51%. So, that didn't feel good, but nonetheless, that kind of a move put a short-term bottom in the market, and we bounced pretty hard. We came down a little bit more, made a higher low versus that August low, and continued in this, what I would call an uptrend. Now, it looks like this trend that we started to make, or the trend that we have been in, and this, goes much farther back, but the move that we saw from August up until recently, we are now making a lower low against a few other lows that we have made. One was back in January, then another low that I marked on my chart was back in November, right? We took out these two previous lows. You could also make the case that we have seen a triple top, double top. I don't really, look at double top, triple top, but the fact that we did not make a significant high against recent highs, and you could also look at, some statistic such as the number of companies in the S&P 500 trading above, 100-day moving average or 200-day moving average. As we were coming up to around, 6,100 or whatever that number was on the S&P, the number of companies within the 500 of the S&P 500 index, the number of companies that were trading above their 50-day and 100-day moving averages continued to decline, which means that the market was kind of running out of fumes. And right now, with the market making the first lower low, I think this trend is starting to change. We probably aren't going to go from uptrend into downtrend, right? We may chop sideways for a little bit. And you could also make the case here that if you are going to call this a head and shoulders top, right, we can probably say that somewhere around 57, 5,600 is our neckline, right? This is kind of a weird looking left shoulder. We made this, double top head formation. And then if we do bounce and we run out of steam, right? If we do bounce, to make it more legit of a head and shoulders top, whatever we bounce to, that level should not exceed, 68% retracement of this recent move lower. And then if we roll over from there, you can look for some kind of a neckline break, and the move to the downside from the break of that neckline is going to be a measured move from the neckline to the top of the head. So from about 60, let's round this off to about 6,100, and our neckline is at 50. Let's call this 57. So about 400 points from 57. Right, you do the math. I'm not saying that this is what's going to happen, but if you want to play that game, you may want to mark these levels on your chart and just to see what the price is going to do going forward. Right? I don't know if that's what's going to happen. I'm pretty sure you're going to see a lot of that, right? Over the weekend, all the um, technical analysts and all the people that publish their um, opinions, they're probably going to look at that as well. Essentially, we're all looking at the same thing. Let's talk about is today the bottom? First thing I'm going to say, and I could make the case for both yes and no, right? Again, I am not here to tell you that hey, today is the bottom or today is not the bottom. I don't know. What we do know is that markets typically don't bottom on Fridays, and just because I said that, that's probably what's going to happen anyways. But if you remember last week on Friday, right, we had a pretty nice push higher, right, which felt like all right, this is it. The worst is behind us. We came down, we held whatever support we thought there was, right? This is last Friday's candle. And then Monday, we tried to rally. That rally was sold into pretty hard. We saw selling on Monday and Tuesday. Wednesday, we tried to rally, and this was just an inside day. Once again, any strength on Wednesday was sold into. Yesterday was a pretty nasty candle. Today, initially, we had some good news, or what market thought was good news. We tried to rally, sold off, took out yesterday's low, and now we're putting in like this a really nice reversal candle. This isn't anything until we see some follow through. Honestly, in my opinion, it's kind of hard to say, all right, we're turning here, we're going higher, because you know intraday moves are not really going to show up on a daily candle, right? This looks like a nice reversal candle. But if you really want to find some sort of turning points, or if you want to look for signs that the market may be ready to turn, you want to start to go down into smaller time frames. So what we're looking at right now, this is a daily time frame. I don't know if there's any one that is right and everything else is wrong type of approach. I also like to look at a 4-hour chart, which is very close to a daily chart, right? This is a 4-hour chart, and you can see that this is the decline, right? So let's go back to the daily chart. This move here, right? This move here looks like just one straight line down. It wasn't really all down. It was down, try to rally, down, try to rally, down, try to rally, down again, and this continues. So you can say that on a 4-hour chart, it's very clear there's a downtrend going on. Okay, let's go a little bit further in. This is a 2-hour chart. Once again, very similar 2-hour, 4-hour chart, right? But you can see now these last two candles, right? They're kind of telling us that this big down candle was rejected by the following 2-hour candle, right? So either sellers ran out or the market doesn't agree to do business at these levels. Now we're pushing higher, but the trend on this 2-hour time frame to me is still down, right? We are not really making any significant higher lows, and that's what I'm looking for as a first sign that we are probably going to turn. There's nothing here on the 2-hour chart. Go on the 1-hour chart, very similar, right? So, and it's not going to change a whole lot. I don't think there's anything that will tell us that we're starting to turn here. We can go to 78-minute as a 1-hour chart, then we can go to 39-minute chart, right? Again, one low. We try to put in a higher low, right, relative to the previous low, and right, let me just see if I can draw on here. I don't want to extend this, right? So here we try to make a higher low, and then essentially that was taken out, and then we continued lower. So I don't know if you want to draw lines, and this was support one, support two. We broke down resistance ones, resistance yet again. So maybe we're finding some sort of resistance. So you can, if you're day trading or if trading on smaller time frames, there's definitely something to some key levels to maybe take some short day trades against. But we can go further. And again, very similar action. There's really nothing going on. What we want to see, if we're looking for clues that the market is going to turn, is we need to maybe make a low, right? Maybe we go down, make a low, come up, another maybe is lower or a higher low, and then take out the previous high, and then start to make a series of higher lows and higher highs, right? Kind of like what we're seeing right now. These are all lower highs and lower lows. We want to see it in reverse. Start making higher lows against previous lows. And if that shows up on a 15-minute chart, right, eventually what's going to happen is you're going to see it pretty clearly on a smaller time frame. So the 15 or 5-minute chart is going to show up, and you will find these clues there. And then eventually, when you zoom out a little bit, you go from 15-minute to maybe a 39-minute, right? You're going to start to see these higher lows show up on the 39-minute chart, then a 1 hour chart, and then all the way out to a daily chart, right? And this is probably going to take a couple of days to show up on the daily chart, but you can find it much sooner, or at least get some sort of a signal that things may be turning a little bit by looking for higher lows and higher highs on a smaller time frames. So, this is at least how I use this information. I don't think that, if you notice something on a 15-minute chart, you don't need to go and adjust your 120 DT income trade. That's not how it works, right? But if you're sitting there and trying to figure out how much more of a pain you're going to have to sit through, if you're looking for some clues, look on smaller time frames. I think when I said that just now, it also, I would like to make a point that if you are going to sit there and look at 15-minute chart or a 30-minute chart or a 1 hour chart, and you're going to find something that might look like, we're turning, or there's some, higher lows coming in, and that is going to make you think that you don't need to address problems that you may have in your trading. You're doing it wrong. You're setting yourself up for failure, in my opinion. Just because the chart is turning, just because you think, things are going to get better or the worst is maybe behind us, if you have a problem in any one of your trades, that is your opportunity to fix it. Fix your problem. And then if the market does go the other way, don't say that, oh, I wish I didn't do it. I knew it. I always do it. And then, the market goes against me. That's not how it works. You may convince yourself that that market has something personal against you. I guarantee market doesn't even know you exist. But you need to do when you need to do things. For example, yesterday I said, the market finished clearly down, didn't feel good, right? And I knew I had a few positions that I needed to address. So a good time to do it is when markets are slow. Even when the market opens for trading at 6 p.m. Eastern, right? Things normally aren't moving as fast as they do during regular trading hours. So it's a good opportunity, assuming the quotes and the prices are normal. You want to go through all of your positions and you kind of want to get an idea about where your problems are. Write them down, right? So trade number, blah, 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 or however you identify your trades. This is where your problem is. What can you do? If you need to roll your naked puts out, down, sideways, whatever it is that you're going to do. Is it a credit? Is it a debit? If it's a debit, how are you going to cover that debit? Or at least that's how I approach it. I write things down so that I know the following day, if the market doesn't improve, if things get worse, for whatever reason, the problem is still there, I have to address it. I'm not going to sit there and look for higher highs, lower lows, none of that stuff. I identify what needs to be fixed, and the market opens. I go and I try to fix whatever I identified as my problems in my trading. So yesterday I found some trades that I needed to fix, and this morning when the market started to move up, I started to go ahead and set up my adjustments, and then the market started to go down. I was not going to not adjust if the market was up. I was going to adjust regardless, up, down, or sideways today. And now I made my adjustments. As the market is now pushing higher, clearly it would probably be a little bit um, less, not, I can't say less expensive. It would probably be better, right? I would probably get if I was rolling for a credit, I would be rolling for a higher credit now than when the market was selling off earlier today. Or I could have been rolling farther down and out, right? If I wasn't looking for a higher credit. Right now, as the market is pushing higher, I would have had better adjustments. Yes, that is right, right? But I can't say to myself, oh, I wish I didn't do it this morning. I should have waited. I knew it. Because if I settle for that, right, the very next time where the market is down and I know I have a problem to fix, I'm going to say, well, no, I'm going to wait because when the market bounce, it's going to be cheaper. It's going to behave, it's going to give me um, more options, or it's going to give me a better opportunity to adjust. And instead of market going up the way it is now, or at least, where we are right now intraday, if the market was to completely roll over and the wheels were to come off, well, that wasn't going to make my adjustments any easier, right? So I don't sit there anticipating a bounce. I don't, and I just, if I know I have a problem and I need to take care of it, I take care of it, and is what it is. If the market's going to bounce after that, then that's just, how the cookie crumbles. I can't control the price. I could only control where my risk is. Now I know I made some adjustments and I may be behind on some trades, right? Whatever I rolled, and you can go to the Trade Alert channel on Discord and see all the adjustments that I do, and you can see how these trades evolve. And if whatever adjustment I made, now the market's headed the other way. If I am behind, if I made an adjustment, I tried to collect the credit. If I paid a debit, I definitely sold something else for a credit to cover the debit. I don't want to add any more of my money to the market. So if I'm paying a debit, I'm collecting a credit elsewhere, or if I can just roll down and out, right, roll sideways and down, I will try to collect at least a small credit, maybe do it for a break even, but I'm not trying to pay a debit. So I know that in my trades, and I can maybe get off this chart and go and show you some of the trades that I have